Good morning, Chris.
Good morning, my friend. How are you?
Good. This is Brian Jones. I'm here with Chris Hood, professional trader, world's most interesting man.
Call me Nine Fingers today.
Nine fingers. What happened?
I'm Chris Nine Fingers, yes.
What happened to your finger?
It's called 50 years old trying to relive an athletic youth that never happened. It's a broken finger from karate. Who would have thought? It's called getting your finger caught in someone else's glove.
Yeah, that
Not the
sucks.
nicest. Yeah, it's
I
not the nicest.
I've had that happen before with my toe. Never my I got it caught, but he's like shin guard and it broke my toe. So
Oh my God. I
yeah.
think my baby toe, I've broken my baby toe so many times, it actually can't move anymore. It's sort of just stuck.
Use
So my son teases me because I've got an immovable toe. Um,
Everybody's got to have a superpower.
absolutely. I think if that's the case, my baby toe could beat anyone. I don't think I've got any nerves there anymore. It's just crazy. Yeah, this thing is really uncomfortable. It sets you back a little bit. It's hard to grip a gi. I've been researching one-armed guard passing, and I haven't found anything yet. So when I do find something,
I tore my bicep and had to figure out some ways to pass the guard with one arm. It's very difficult.
my coach was telling me, no, you have to have both arms. I'm like, can I not use my head? I was trying to do like a cartwheel pass. I was holding the guy's gi. I was at the top. It was a half. He was in half guard bottom. And I sort of held the gi down and then put my head down on the floor and then try to, jump over. But, I make it sound like I'm incredibly athletic, but you can imagine some guy with no athletic skill going on his head doesn't end well for anyone. So I think I just, redwood tree on the guy, it's not the nicest. So
that's all right.
But I'll get there. They said it will take a couple of weeks to heal and I should be all right.
So what's the what's the market situation looking like? It was kind of flat yesterday. Just didn't do.
Oh yeah, this week's going to be a little bit boring because we've got the Fed coming up. We've also got monthly expiration on Friday. So usually or seasonally during this time, you find that the market tends to get a little bit more choppy, a little bit more volatile. Let's get through Friday. And then by December 3rd, if you look back in history, December 3rd is pretty much where the rally starts because of Christmas, right? We've got Thanksgiving coming up as well. So usually going into Thanksgiving, there's a little bit of volatility and there's a little bit of upward bias. And then post December 3rd, we should be seeing that rally into Christmas. Should be. Father Christmas doesn't have to come. Just because he's come before doesn't mean he's going to come again. So, the way that I've been talking to my clients is what we've been doing is taking our option trading profits and buying index-based products like SPXL, the triple leveraged S&P 500, but doing it on a marry put basis, right? So basically taking away the downside risk, holding the upside, and we'll look to remove the insurance leg on those trades. Probably, by Christmas, we should be out of them, right? So we don't over-insure them for too long. We just want to get through this sort of dodgy period, so we call it, and then see where the market goes. But I'm pretty bullish. I think that there's still quite a few setups that are there in the long run, and definitely we're in that season for NASDAQ. So NASDAQ's entered its 8-month period of the year, right? So there's 8 months of the year, usually from November till around April, May, that NASDAQ does really, really well. So your bias should be to the long side. I would definitely not be shorting this market on anything. This is not as short as a short trading market. You'll just get your face ripped off, and that's not very pleasant. I might end up being six fingers then.
So this is the time to start to kind of look at maybe QQQ or TQQ.
Yeah, TQQQ, QQQ, QLD is another one as well. We've got some positions there. We've been trading SPXL a lot as well, taking profits from there and actually buying the stock. So one of the things that I've been speaking a lot about this week with my clients is more about what do you do with your trading profits? A lot of people don't have a reinvestment approach, right? So I've got a couple of clients that use their option trading strategies that we have and the techniques that we have to accumulate capital to buy Bitcoin. We've got a couple of clients that buy property. And we've got a couple of clients that reinvest into the indexes. I do the index thing. I'm not too connected to Bitcoin just yet. I have got some cryptos, but I don't put a lot of money into it. And effectively, that's the best strategy to approach, is you've got to convert these trading profits into something that's going to grow exponentially over the next couple of years. So buying SPXL or TQQQ or the shares, not the options. So
Right.
avoid reinvesting your trading profits into options themselves, rather move it into the stock and take away that theta erosion risk. And don't buy any of those inverse trades. Don't buy inverse stocks, right? Those are designed to go to zero. So you don't want to have that. Whereas the positive ones, the triple leverage to the upside, are designed to go up. So, the reinvestment strategy is really important. The key thing over the next couple of months, making money, I think, during Christmas and the fourth quarter is actually, it's a lot easier than over the summer, right? We know that for years. It's been like that. The hardest thing is holding on to your money come the end of January, February. That's the most challenging thing for traders. So make sure that you've got your reinvestment strategy done now, so that when you get to the sort of end of the cycle, sort of towards January, February, you're not going to be sitting there going, well, what do I do now? And you don't want to be stuck in that bias of, this rally is going to continue forever, because it doesn't. And that's when people give the money back. So you want to make sure that you've got that written down and ready to go.
So you're just putting the money into your trading account. It builds your trading capital, which causes you to increase your size, and then you get smashed at the end.
Yeah, what I do is I put it in my trading account, but I keep them separated out. So I've got a portion which I call capital. So anything where I've made profits gets taken back and put into capital, right? Mm-hmm. So I don't trade that money. I usually buy ETFs, or I buy, I've got my list of majors. I'm going to share my screen so you can see. Guys can write these down if they want. These are the stocks that I trade on these are the ones that I watch on a daily basis on the side here. UNG, Moderna, all the SPDR ETFs, Google, Microsoft, Facebook, etc. I don't try and trade too many different tickets. The most important thing is always having a list of stocks that are, within your sort of favored watch list. These are the ones that you're going to trade most regularly, and you stick with those. And then once you've got that list down, you just follow them every day. The end of day activity is pretty much, going through the day charts or the hourly charts, whichever one that you want, and, looking at your indicators. Here at the moment on Tesla on the day chart, I don't know why these guys are honking their horns so early in the morning. It's just, it's cold weather and everyone starts driving badly. Here we have a sell signal on Tesla. We've got squeezes firing to the short side, potential moving down here, B score below 50. We've got the declining alpha score. You don't really want to be going long Tesla right now on the day chart, but on the hourly, let's have a look and see what's happening. We've got a shift here in momentum. We have a bottom forming. We could be moving up. This is the top of the range. We've got some clouds forming here on Tesla as well. So, we've got a stochastic buy. We don't have an alpha score just yet. We've got some negative momentum. So you want to make sure that you're going through your watch list every single day. Otherwise, you will miss signals, right? So I start with the day chart. I go through it. I look at each of these stocks. We've got sell signals. Now, if we've already got a position in these trades and we get sell signals, or we've got some short-term momentum, I do not look to exit those trades, all right? I'm looking at this trade over a period of 3 to 4 months, and I'll be using sell signals as potential opportunities to add to my existing position. So I've already bought in back down here. We added some more over here. I'm now waiting for another buy signal up here, and we keep adding to those positions as the trade starts to develop. What's very important is not to become skittish. As traders, people can become very quick to just go in, get up, go in, get up. Sometimes that's not going to help you trade the longer trend. So, every day you go through the list that you've got and you see what the signals are that you're going to be trading. You can see that we've got quite a lot of sell signals already forming. This one, we're building a position in here. We've got multiple buy signals here on ITB, SOXL, semiconductors again. We had a strong cluster of buy signals done here about 2 weeks ago. And we're trading that.
SOXL, you think there's more upside on SOXL?
Yeah, I think so. I think
pulled back a little bit, but you know.
Yeah, what you've got to remember with these things is nothing goes up in a straight line, right? So when you get in on, say, a moving average class, together with some of our momentum readers here with our wave score, together with our alpha score, and you're buying here, you really want to be accumulating your position, right? So you want to be accumulating at secondary buy signals and so on, right? This is our range. We have our range between the upside, the downside. This is the midpoint of the range. So what we're looking for is anytime the stock comes close to the range mid here, those are opportunities to buy, right? So there's another opportunity to buy. Here's an opportunity to buy. There's an opportunity to add. And now it's tracking along the 8-period hull, right? So now we've got opportunities to add to these trades as the trend continues to form, right? So this trend, if you go out, that's what's happening. You want to be trading this movement up here, right? Yeah, it can chop around, but you don't want to take the first sign of a sell signal and exit, right? So these orange lines that we put in here, these are our stop lines. So if SOXL pulls back to this line, we will exit the existing position, take our profits, buy stock, and if it hits the second line, we will be re-entering our position. We will start to reset our position and then build up. So these lines are really important because they give you that discipline. Every day you go in and look and see what's going on. We've got a good trade on with Microsoft. We're up about 500 or 600% now on Microsoft. Again, it's about combinations and clusters, right? So here we have a cluster of buy signals that were occurring back here in October. Now we've got one sell signal. That's okay. This is a whole moving average. So this one is pretty quick. There's the 8-period moving average, and here's the midpoint of the range of Microsoft's price. These are our stop lines and our adding lines, right? So if we end up hitting this line, we exit our position, take our profits. If we pull back to this line, we start rebuilding our position, or we can add to the position as well. So a lot of times, many people, they don't do this work because they don't know what stocks they're going to be looking at, right? They're waiting for some alert from a WhatsApp chat group, or they're looking for, their buddy at the gym to give them a tip. That's the most unproductive way of doing this, right? The first thing you should be looking at is building a watch list out of the indexes. All right, it's really important to start with the indexes first. So when we look at the indexes, and we can see that the indexes are starting to create, areas of strength, right? We always look at the EMAs, we look at trends, we look at strengths. What we're looking for here is strength on the EMAs directionally. All right, so we want to know that it's moving in the right direction, the double green. We're looking for squeeze setups. So here we've got weekly, daily, 4-hour. We know where the squeezes are. And then what we look for is confluence of the entry exit signals here around the moving averages, right? So here we've got the 8 to 21. We've got the 21.34. We've got the 34.55. We need to be above the weekly 21 and below and above the 8, the daily 8. So if you're below the 21, below the 8 with no trade, the price is underneath these moving averages, or these moving averages are negatively stacked with no squeeze, there is no reason to be long biotech. Like there's no reason to be in biotech as a sector. Now you could look for the ones that have got yes, 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 and they're above the key moving averages, but they don't have squeezes, right? So in technology, we've got the right moving averages, but we've got no catalysts. So we've got nothing to actually stimulate a move to the upside. And if we open up the trade, or we open up XLK as a stock, you can see that we're trending. We've got sell signals. We've got, it's trending in a nice way, but we've got nothing down here at the bottom of the graph telling us that we're going to see higher prices going forward. So we've got no squeezes forming. We have nothing that's going to give us a catalyst to the upside. And this is the most important part, right? You'd isolate from here. You could be looking for, well, where are the most squeezes? Well, XOP, in oil and gas exploration, a 12-day squeeze with a 6-period 4-hour squeeze. We don't have a 821 entry signal here, and we are below the 8. So if you are a risky trader, if you were aggressive, you would be willing to say, well, I don't really mind if it's below the 8. What I'm going to do is I'm going to set up what we call a pilot position, take a trade, 90 days out, 60 delta call option, and just hold one contract just to get it on your book to see what happens with that. And as the trade starts to develop and improve, and as the squeeze starts to fire, you'll then be able to add to that position or change it, right? So you'd go to XOP and you would look at this and you'd say, right, XOP, you can see it chopping, it's stuck within this range here. It's not really moving to the upside. We've got a squeeze that's forming. Here's that long squeeze that we saw. We have a stochastic buy that was offset by the sell. Our B score has gone above 50. So this is a key thing for me. This B score above 50, but my momentum is dropping to the bearish side. It's falling. So this momentum that's keeping the stock up may not last long. My alpha score is also dropping below 70. Now, for this trade, what we'd be looking for is to say, well, at what levels would I be interested to buy this stock? So the first thing that we would do is we would add what I call the EMA candles. Very, very simple. Here's the 34 moving average, right? This is an index stock. So what I'm looking for is prices that touch this range. If it's between the green line and the red line, I can add to this position as long as this trend is up, right? Now, to confirm that the trend is up, here we have it. We've got the 8-13-21 EMA is bullish and our direction is bullish. So we know that it's a double green. We would call that a double green. So from here, would I be interested in adding to this trade? Yes. If it pulls back into this price zone, you can see my entry point. I'm looking to add to my position at the yellow line. Now, I don't really mind too much about any of the bearish signals that might be printing on the squeeze at this point, because I'm not trading the squeeze, I'm trading the trend. I really just want this to trend up in the right direction. So every single day, every day, you have to do this without fail. And if your list is 100 stocks, it's a lot of work. If it's 5 stocks, it's pretty easy. So, I have a list of maybe 15 stocks that are priorities out of this list. Google is one of them. Every day I watch Google and I have levels at which I'm interested in buying stock of Google as well as new positions in Google. So at any of these levels, if any of these get hit at any point, all right, I will be a net buyer of Google. This is not a stock that I will short. Amazon is another one. Here you can see Amazon starting to get some positive buy signals coming out. We have a cluster of buy signals that happened here. We had a candlestick reversal. We had a moving average reversal, and we had a secondary buy signal on our whole moving average. So we've got 3 buying signals here, all in a cluster. We've got a buy signal on the stochastic. Our wave score is above 50, and our alpha score was above 70. So this is why our win rates are high. And this is why our trades are successful. It's not because we trade individual strategies. We trade composites. We trade signals that are based out of multiple pieces of data looking at the same stock. So none of these signals contain the same information. They're all looking at the chart in a different perspective. So if you've got 4 different people looking at the chart, all with one perspective, and they all come to the same conclusion, there's a high chance that your trade's going to work, right? So down at the bottom, something that we've been playing with a lot is when we back test some of our strategies, our reversal strategy that we use, which is this blue arrow here and the buy now signal, that is a 2.4 profit factor, right? This means even though we only win 40% of the time, when we win, we make 2.4 times more money than when we lose. So this is a very effective strategy because of its profit factor, right? There are 2 things that will drive a strategy. The first one's going to be your profit percentage. So how many times you are profitable. And the second one is going to be how much more money do you make to the upside compared to when you lose to the downside, right? This is a very critical piece of trading, all right? A lot of people will take single strategies. So they'll trade, let's say, this is just very, very basic. Let's take a MACD strategy, for example, all right? There's some traders that will only trade on a MACD reversal. They will take Amazon on a MACD reversal on the day chart, and you have a profit factor of below 8, which means for every $1 they lose on a losing trade, they make only 81 cents on a winning trade, right? So this is not a very good strategy to follow on Amazon because you're going to lose over time. The strategy has not been profitable. If you take that off, let's just clean this up a little bit so that I've got some space. This is what people should really be looking for, is strategies that generate large amounts of profit on that stock, right? So if you're looking to trade Amazon and you're going to do a MACD strategy, you've got to know how successful that strategy is on that stock, because sometimes the stock is not going to react the way that you want it to react. We use 3 strategies: the reversal, we use our alpha score, which is our green line here. This is another composite indicator that I've built. And from here, you can see we're profitable more than 50% of the time, making nearly $2 for every $1 we lose. So we will be profitable. Okay, over time, that strategy will be profitable. We use our wave alert as well. Again, 40% of the time profitable with 1.7. So, you know, compared to a single indicator strategy, when you compare it to a composite strategy, you're going to get totally different results. And this is probably the one area where a lot of retail traders get sucked in pretty quickly, is into the world of the indicator. All right, there's no, I don't think there's a holy grail. I think I mentioned this a couple of weeks ago, is that you can get led to believe that one indicator is the solution to all your trading problems. And that's not entirely true, because an indicator is only as good as you who interpret it. All right. And if you're interpreting, you know, let's say you take this reversal signal here, which we know is profitable, and you don't act on it, that's a interpretation issue. All right. That's not an indicator issue. That's you as a trader. So be careful if you're out there listening, using one strategy to fit all. All right. Not all strategies are equal. Not all indicators provide the same degree of, should we say, clarity of the signal that they produce. So it's really, really important to remember that. I try and encourage my clients to use a multiple of indicators. And when we build composites, we're looking at multiple indicators, looking at data the same way. All right. So we look at the same data, but from different perspectives. And that gives us a better win rate and a better performance. So something to bear in mind, if you're just starting off, you know, be careful about these strategies that are pretty much boilerplate, right? Boilerplate strategies, everyone uses them. All right. The issue with boilerplate strategies is there's no trading edge. You have no trading edge. If you're following a MACD strategy, so are 90 million other people. So the strategies that you follow, the way in which you interpret it, that is the trader's edge. And that's the thing that we try and build, because every single person has a unique perspective of interpretation of data. All right. There is no way that you can go and say, well, I'm going to become the world's best trader. I'm going to go and copy so-and-so down the road who made a few $100s on crypto and do it, because you're not him. You know, you can't be like that, right? It's like me trying to be like you in jiu-jitsu. I mean, there's absolutely zero chance of me actually being able to do half the stuff that you can do, let alone a third. You know, it's just never going to happen. But I can still be successful in jiu-jitsu, trying to be as good as I can be for myself, rather than trying to copy someone else. Same thing in trading. So, you know, try, if you're a beginner trader and you're starting out, just be sensitive that not every indicator is going to give you the same result. Not every indicator is going to work on every stock. It takes trial and error to find your sort of niche on how it works. You know, guys can get in touch with me through Rogue, and I can help them, you know, build their trading plan. That's what we do in order to help people become the best traders that they can be. So something for guys to think about.
Proprietary indicators are composites in and of themselves, right? So your
Yes.
proprietary indicators have multiple indicators mixed in with them, and then you're using multiple proprietary indicators. So there's a lot of data going into this.
Oh yeah. It's what we found was, or what I found was over time, is if you look at a MACD and you overlap that with something else, sometimes the signals can contradict. All right. Or if someone says, okay, yeah, we're going to do a strategy, and what we're going to do is we're going to look at the squeeze. Okay, let's just imagine that we're doing something like this, right? So if you have no weighting basis, right? On what basis?
But a little bit of a power outage, folks. Hopefully we can get Chris back on here.